All right, everyone, welcome back to another one of our Living 48 Mortgage Minutes. We are super excited to have with us one of our favorite preferred lenders with us. This is Stacy Williams from Guild Mortgage. So Stacy, thank you so much for coming back and being with us again. And we're keeping our social distance, obviously, and so appreciate you jumping on the Zoom with me and recording this little message for all of our clients. So thank you. You guys staying safe and healthy over there?
Yeah, absolutely. I'm working from home. My office is set up for kids, help homework. So I'm half homework, half work. But yeah, we're making do, and everybody's happy. So we're good.
Awesome. I love it. Yep. So much change and shift has happened. So wanted to have a little quick conversation with you because we are starting to see the Arizona economy world sort of start to open up here. And so I have recently had some of my buyers come back into the market, and we are finding some interesting scenarios that happen. And so wanted to sort of get your take on this as a lender, and let me sort of like paint the picture for everybody, and then we can have a conversation around it, and you can kind of help us understand what's going on. So when all of this COVID went down, we had a lot of people that got furloughed or their hours got greatly reduced. And being the super intelligent people that they are, they went out and got some side hustles. They started driving for DoorDash. They started working for the grocery store, whatever they need. They did what they needed to do to keep their family afloat, which, oh my gosh, they're heroes in my eyes. They're just
Absolutely
amazing. And I love that they did that.
Yeah.
So they're starting to come, either their regular job is starting to come back maybe a little bit, or they're feeling like, okay, I've got this side hustle that is keeping me afloat and it's making me the money that my regular job would have made. So I feel confident moving forward back into purchasing a home. But we're finding that the lenders aren't, that side hustle is not translating, right? And so I wanted to sort of chat with you about that and have you help us understand what the lenders are looking for and what we can expect and how we can go about best preparing to come back into buying a home here.
Yeah, absolutely. So the side hustle, we would consider that like dual employment. Let's say you have a primary job and a secondary job. From the lending perspective, we have to have a 2-year history of them doing 2 jobs before we can use the side income. And so a lot of times it's not going to work, although it's great and it helps them survive. Unfortunately, that income just can't be counted when they're looking to qualify for a mortgage. So if we had 2 years experience working dual employment, then yes, we could absolutely use it. Unfortunately, that's not the case most of the time, right?
Yeah.
Right. So what we'd like to see is them get back to their primary employment, get back to full-time or to the hours that they were working consistently beforehand. And usually what we're looking for is at least one paycheck that shows that they are back full-time on their primary employment, right?
Yeah.
We know if they're back on their job and they don't have that check quite yet, we can still work through the pre-approval process, get them ready to go, maybe even have them out there shopping, just knowing that they would need to provide that paycheck before we'd actually want to write an offer, or definitely before we close.
Okay. So before we would close on our escrow with them, how many paychecks showing that they are at their normal regular hours from pre-COVID does the lender need to have in hand? Just one or two or what?
We're going to require one paycheck to show that they're back full time.
Okay.
And we're also going to, combine that with a verification of employment. So we're going to call the employer, ask them to fill out a form that guarantees their hours or shows that their hours, and then we'll also have a paycheck to support it.
Beautiful.
So we have 2 sides covered. Now, if they start a new position or a new job completely separate from the previous job, same line of work but different employer, it should still be the same process. It should be one paycheck as long as the verification of employment shows that they're full-time.
Okay. So like if you went from one restaurant to another restaurant, you're in the same industry basically, it would transfer over. But it would be like if you went from a retail job into a restaurant job, those are 2 very different industries.
Well, yeah, that's true. They are very separate industries, and this kind of takes it a little deeper than what we wanted to go to, but that's okay. We have clients that, let's say they work customer service at a call center, and now they go to work for a doctor, and they're like an assistant or an admin assistant or office assistant. Those are, I guess, jobs that require a lot of schooling or training. And so those, we can kind of make that work. It's, let's say you were working in the restaurant or service industry, and then you went to a highly skilled engineering job. Unless we had some sort of background, it would be hard for us to use that employment, and we'd need the 2 years experience. But oftentimes, if you're an engineer, you went to school, right? And so
Right.
you're schooling for that 2 years to help bridge that gap.
Okay, so really this is kind of a conversation that they need to have with their lender and just see, is there
Absolutely.
a bridge between this and this? Can I count this or can I not?
Yeah.
And at least we can get the ball going from there and
Yeah,
have definite answers.
I think to get back to the main thing, consistency in their income is what we're primarily looking for, right?
Yeah,
Make sure that they're back to where they were prior to this fiasco.
yeah. So
It's crazy.
speaking of the fiasco,
Yeah,
at the beginning of this, lending was kind of all over the place. Like we were
Yeah.
seeing interest rates bouncing around like a bouncy ball, and people were getting freaked out, and programs were going away, and all kinds
Yeah.
of crazy was happening. Can you kind of tell us where the lending industry is at this point? Like, are we safe to come back into this? Are we going to be able to lock our rate at what we're, the rates that we're seeing about today? Like how is that all working for you guys now?
Yeah, I think we've seen a little bit more consistency in the day-to-day market. And I feel like lenders kind of have their finger on the pulse now to get a better idea of where rates should be. When we started seeing all that volatility before, that was not necessarily caused by the market, but by mortgage companies themselves, because they didn't know what to expect the next day. So they would automatically raise their interest rates to slow down any more locks or anybody coming in until they can get a pulse for what was going to happen the next day. So for the first 3 or 4 weeks, we saw tons of just up and down, and it just didn't make a lot of sense. And after 15 years of doing this, I've never seen anything like that quite before. But we've kind of moved away from that. Things are more stable. We're not seeing rates be significantly higher from one day to the next. They are relatively low. As a matter of fact, I was reading an article that says we're at near all-time lows in Fannie and Freddie products, so about 3.25%. So that's good.
Yeah.
And I've seen them stay relatively low for at least the last 3 or 4 weeks.
Fantastic. So people should be feeling fairly confident to come back to lending, and not that it's not going to like go crazy town on them right now.
Yeah, I think we're in a good position. We also have the backing of the federal government right now, who's making sure that rates do stay low. I think the government realizes that the housing market and the housing industry as an entirety really boosts our economy, right? And so they realize the importance there, and they're dedicated to making sure that financing is available, people can buy homes and become homeowners, right?
Awesome. Okay, so a lot of our first-time home buyers were utilizing the down payment assistance programs and stuff, and at the very beginning again of this fiasco, a lot of those got yanked. Are we seeing those come back yet?
Yeah, we are. And if I can give you a little background as why they got yanked. So when you do a traditional mortgage, it closes, the loan gets insured within 24 to 48 hours. Us as a lender is protected. Well, when we do the down payment assistance programs, it usually takes about 2 to 3 weeks before that loan can be insured. So there's a longer risk period before it's serviced or sold. And what the down payment assistance companies were saying is that, well, if the borrower loses their job from the time that they close or they file for forbearance, since the time that you close before we buy it, we'll no longer insure that loan.
Mm.
A lot of the mortgage companies were like, we can't take that risk. We step back. Now, we work closely with a lot of the down payment assistance agencies. Guild is one of the largest producers of down payment assistance loans in the country. So we've been working closely with them. We got them to agree to insure those loans to some extent. I don't know all the details, but we did come to an agreement that allowed us to continue to offer the program. Now, the guidelines have changed a little bit as far as credit requirements go. Some of them have raised the minimum credit requirements to 660, where they were down at 640 before. But then some of the other programs we have still offer 640 down payment assistance. So I feel like we can offer as many of the programs as we were prior to COVID.
Okay.
Yeah.
Now, on the opposite end of the spectrum, we saw huge challenges with the jumbo loans. And
That's
so,
right.
typically these people that you would think, oh, they've got so much money, they're buying these huge, expensive $1 million homes and such, but all of a sudden they were finding that they could no longer get loans either. So
Correct.
where are they looking?
They are a little slower to come back to the market, jumbo financing. So we used to have quite a few different options for jumbo financing. Now it's very limited, and then it's also very restrictive. So The reason why that those went away is because those are not insured by the government. Jumbo
Right.
are investor driven.
Yeah.
And investors saw the risk. They no longer wanted to buy those type of products. And so there's nobody to buy them, so there's no funding.
Yeah.
They
Yeah.
went away. So now I guess the solution, obviously you take advantage of a conventional loan as well as a second mortgage,
Oh,
get up to that higher price range if you need to.
okay. So there's a good solution out there for
There
you.
is a solution. Yeah, it's a solution.
Yeah. Maybe not the best.
Yes, but it's better than not having any solutions at all.
Gotcha. Gotcha. Well, I love that. I love that, the mortgage industry is always working the problem and figuring out the solutions or the options for us and all that. And so, of course, that's why we choose to partner with great lenders like you, Stacy. So we
Thank you. Thank you.
appreciate your knowledge and all of that guidance. Now, if any of our friends, our community here have any mortgage questions, I know that refinances are a big deal right now as well. Is that something that you can help them with?
Yeah, definitely. We handle refinances as well as our purchase business. And now is probably one of the better times, or I would say now between now and the end of the year would be window to take advantage of it.
Okay.
Anticipate rates to stay low, but yes, we're at all-time lows. We're seeing, obviously, we've had a lot of appreciation over the last few years, and that seemed to level off, but it's not going backwards. So if you bought your house a year ago or potentially even 6 or 7 months ago, there's a good opportunity to improve your interest rate. But if you bought a little longer ago, you might also be able to get rid of mortgage insurance if you did a smaller down payment to begin with. So you can improve your rate, get rid of mortgage insurance potentially, and save a whole lot of money.
There you go. I think that's a great plan. All right. So Stacy, if anybody needs to talk with you and needs to ask you questions, needs to see if they qualify for a loan or for a refinance, what's the best way they can get in touch with you?
To give us a call, my phone number, 480-454-5625. 480-454-5625. I always like to say it twice. It's like programmed to me.
Exactly. Me too.
Give us a call. We'll take a look at your mortgage statement to see where you are currently, and we can put together a plan. It doesn't require you to apply or have your credit pulled, but at least if we have your statement, we can do a direct comparison and tell you if it makes any sense to do or not.
Perfect. Perfect. All right. And I will tell you guys, if for some reason you didn't have a pen and paper handy and write down Stacy's phone number, you can always visit our website, which is www.living48realestate.com. And if you go all the way over to the right and go on under more, there is our preferred lenders, and you will find Stacy and all of his contact information under that section of our website as well. So there's lots of resources for you there, including how to get in touch with Stacy. So please take advantage of that. And Stacy, again, we just want to thank you for your time. Thank you for educating us on what's going on in the mortgage industry right now with all this timely information. It's very valuable to us, and we really, really appreciate it. So thank you so much for that.
Katie, I appreciate you. Thank you.
All right, no problem. Well, we're going to catch you on our next opportunity to have a mortgage minute with you. All right, we'll keep you in the loop.
Can't wait.